Seeing the markets really driven by anticipation of all the results that are expected out, particularly from the banking sector. But what was interesting was that listing of CIC Insurance. That share hit around, it was introduced at 3 shillings and 50 cents, reached a level of about 7 shillings, only to settle at 5 shillings and 25 cents there.
And it's only traded for 1 hour, Mashudu, but during that time, the value of CS Insurance actually picked up 50%, which is very interesting considering it was the first day. We had a chat with the CEO of CS Insurance, Nelson Kuria, yesterday. He says he's very confident of how that share is likely to play out, even though insurance companies, the 4 other insurance companies listed on the Nairobi Securities Exchange, have been the second worst performing counter. But let me introduce Steve Biko of now with the Hidalgo Group. Thank you very much for coming on the program. Let's start off with the CS Insurance now that we've been talking about it. And we saw the value of the company pick up 50% despite only trading for an hour yesterday. How does this play out in the long term?
When you look at the key fundamental aspects of CIC, you're looking at it's the only insurance firm that's actually, whose target is actually different. It's looking at the bottom kind of market, the people that are not insured. And you're looking at the insurance penetration in the country is actually 3%. So you're looking at the company targeting the informal sector in terms of insurance, SMEs, farms, and the farmers. So it has a huge potential in terms of being able to penetrate compared to other listed firms, and it has a good it has a good future. It's 57% rise in terms of capitalization yesterday, which was 2.2 billion, is a key indication that in the coming days actually going to see which can be able to revive investor confidence. Actually been missing in the market. So we'll be able to see that with the key strong fundamentals and the good good goodwill that the firm is enjoying. We can only be very positive about its growth.
Let's talk about the numbers we've just seen this morning out of Olympia Capital. It's posted a 15% growth in the financial, its earnings per share, though the company actually posted a loss of 18.6 million shillings on discontinued operations. The earnings per share at 38 cents right now. What do you make of these numbers?
We need to understand what actually Olympia Capital does. We're trying to see with its kind of core business. When you look at the real estate aspect, especially in terms of its leasing services, we're able to see that with a lot of the issue of the interest rates and the issue of changing business dynamics, lack of credit facilities from the banking industry, when you look at 18.6 million on discounted loss, it's huge. But we were able to see that given the fact that it's how it's been able to expand across the African continent, it's actually been able to pick up with 16% on performance growth is pretty impressive. However, how the next quarter is going to play out, especially in terms of being able to get credit facilities from the banking industry, will be able to determine whether it will be able to turn around the aspect of loss making. Because
Olympia Capital is actually a holding company for companies in Botswana, in South Africa, in Kenya, and also in Gaborone in Botswana. So it's a company that's very diversified, especially towards the south of the continent.
And given how the strategy, for now the strategy is actually firming up.
Yes.
A few quarters, a while back, people are wondering, why was expansion done so fast without really looking at the business environment in those key countries that you just mentioned. But we can be able to tell that now the strategy is actually starting to pay out and it's farming. And now we'll be able to see that the amount of money spent in terms of expansion, the bottom line is now starting to improve.
Let's talk about the market as a whole. Yesterday, the Nairobi Securities Exchange picked up again another just slightly over 10 points, and it is inching up. We're not at 3,800 yet as we were last week, but a lot of it foreign participation. What stood out from the activity yesterday?
Foreign participation actually stands high at around 67%. The interesting thing is that we haven't seen a lot of investor activity or confidence until yesterday when CIC listed. So it seems CIC came with good fortunes. And we're looking at probably the market hitting 4,000 this coming quarter. And the interesting bit is what we really need is investor confidence, and we're hoping CIC will be able to turn this around. But also, what needs to be done is to be able to create local investor confidence, because at 67% foreign participation of the market means that Kenyan investors are not really keen on investing in the market, and this is something that actually needs to change.
Speaking of foreign investment, there's this Kenol Kobil issue which refuses to go away. Apparently, Kenol Kobil kept the government in the dark regarding its takeover bid by Puma Energy, and there's a development around that.
The one thing that we need to understand is this kind of takeovers never really happen in the country.
Right.
So in terms of precedents, in terms of legislation, policy, nothing exists. But from the laid down procedure is that Ken Okobil actually went by the book, which is informing the capital markets and then the NAC and then the government. But I think this is not something that should actually worry the interested parties. And I think once the issues that have been raised are sorted out, the deal might go through. The unfortunate bit is that we need to understand the aspect of how takeovers are going to be done, and especially in terms of being able to protect the interests of the minority shareholders.
What are your stock picks going forward? Which ones should we be looking out for?
EABL, are we looking at Kenya Commercial Bank and CIC.
Why for this specific ones, very quickly for each? Why?
One, because of the strong fundamentals in terms of the PE ratio, in terms of the number of shares being traded, and given the fact that these are the stocks that have more than 87% foreign participation. And foreign investors actually, the ones actually being able to move the market with a lot of money. A lot of local investors are holding back because of a lot of uncertainty in terms of how the interest rate is going to, if impact on the returns, how politics is actually going to be, and many of them are wondering, stocks to pick and things like that.
Let's end with the shilling, up yesterday for the third straight day, mostly because of higher foreign inflows rather from tea and coffee. How do you see this likely playing out today?
It's actually, for the first time, the shilling is actually going to firm up because we're going to get more positive results from the agriculture sector. Unfortunately, it will not last long, probably until the end of the month when our exports to, say, countries like Iran, who are suffering a lot of sanctions from USA and other European countries, are going to impact on our exports. So this should actually dim the continuation farming of the Kenyan shilling against the international currencies. But in the meantime, I think people are laughing all the way to the bank, at least for the next 1 or so weeks.
So nothing too radical, around about 83, 84?
Yes, and the other thing is, the only interesting thing is we need to understand that in as much as we're able to get the benefits from the agricultural sector, other issues are also going to affect it, like the cold weather coming in, and then the overall effect of it.
All right. Steve Biko with the Hidalgo Group, many thanks for coming on the program.
My pleasure.
And that should be just about it from us here, Mashudu. I heard you complaining with Godfrey earlier about the weather. You have no idea. I think you must have exported Joburg's terrible weather down here to Nairobi because it's just as bad.
It did. It's very cold here. But Larry, before I let you go, I just want to find out something from you, or perhaps your guest. Like your guest said, the shares of Ken Okobil have been suspended by the CMA. But when I look at the NSC, the share seems to be trading. Maybe you could throw it to Steve Biko there and just find out why is the share still trading if we are, in reports, it's been said that it has been suspended.
That is a very interesting one. We were talking about that with Biko a little earlier, about Ken Okobil allegedly suspended, then it is not suspended because it appears in the trading reports, yet the Capital Markets Authority, the regulator, says it is suspended.
As I said earlier on, nothing of such a sort has ever happened in the country in terms of a takeover, in terms of a precedent on how to handle this issue. And I think capital markets need to come out clearly on its policies on how to handle this, because at the end of the day, we're able to see that the government is actually complaining of being left out of the deal. We're realizing that the minority shareholders, their interests are not being protected. And at the end of the day, you can't really suspend a share from trading and then, have it trading again, and then it shoots up by more than 50% and then suspend it again. There's a lot of conflicting information coming out of the CMA and the NAC at the end of the day. And this is something that needs to be clarified if the Puma deal is supposed to go through and be seen to be clean and above board.
All right, because that Puma deal, they are very confident it will be going through, and there's a likelihood that Ken Okobil might even get delisted from the Nairobi Securities Exchange. But the one thing Biko does say, and Mashudu, you understand, is there's no precedent. And one of the things, perhaps loopholes, is that there is no law as to when a share needs to be suspended and what procedure to follow that. So it appears the Capital Markets Authority right now just relies on its own judgment when to make those decisions.